indulgence. Okay, so good afternoon or good day to everyone, especially those coming in from other time zones. I'm Ronnie Limbaga, and I'd like to welcome you to the 32nd episode of Tuesdays with MEFIN, with our topic on regulating climate and disaster risk insurance, realities and options. And to start off the webinar, I'd like to call on our program director, Dr. Alexander Yeager, to give the opening remarks. AJ, please. You're muted, AJ.
That's true. Again, I'm muted. Thanks very much, Roni, for the introduction. Dear participants, dear speakers, also from my side, hello and a very pleasant day to everyone. I'm Alexander Jäger, Program Director of RPI Asia 3, and on behalf of GIZ and MEFIN, allow me to welcome you all to the 32nd episode of Tuesdays with MEFIN. The topic of today's webinar is regulating climate and disaster risk insurance in Asia, realities and options. The base for today's exchange is provided by the key findings and the recommendations of a study of the same title, which we published recently, and which was kindly produced by Martina Wittmeyer-Pfister. Thank you, Martina, for your support and in advance for the presentation today. As we all know, extreme weather events brought about by climate change have become alarmingly frequent over the past years, and the impacts are felt stronger year by year all over the region. Regulators and insurers worldwide recognize this fact and have actually made important advances in regulating this area. However, challenges still do exist, which constrain the overall efforts and success, be it in the form of regulatory framework bottlenecks or for business development challenges. Today's webinar will discuss key challenges in policymaking, regulation, and supervision, as well as how to overcome them. The study published looks into practices and responses of supervisors inside and outside Asia, with a focus on the micro level. Let me particularly mention three supervisors: the Philippine Insurance Commission, the Security and Exchange Commission of Pakistan, and the Insurance Supervisory Authority of Vietnam, who supported a study with cases which contributed greatly to the study's recommendations on developing and enabling the environment for climate disaster and risk insurance. At this point, we may acknowledge the experts who will support us today. Aside from Martina Wittmeyer-Pfister, we have with us Mitch Velosa, Executive Director of the Philippine Insurance and Reinsurance Association, PIRA. Mitch, thanks very much for joining today. And he will be talking about the Philippines Catastrophe Insurance Facility, short PCIF. And in addition, we have from the Ajot Insurance Limited Company of Nepal, we have its Deputy General Manager, Mr. Ani Kumar Aryal, and Mr. Sudip Budel, who will share their experiences of a similar initiative called the Nepal Microinsurance Pool, or short MIP. The key question for today is, what can regulators do to push the frontiers of inclusive climate and disaster risk insurance further? We hope that you will pick up important insights in the course of today's webinar. We also encourage you to actively participate in the discussions, as your inputs are most welcome in addressing the topics that we have today. So thank you, and we look forward to a very interesting session. Over to you, Roni.
Thank you very much, AJ. Shine, the next slide, please. So just a recap of the agenda. We just had the opening remarks. So this will be followed later by a short webinar guidance. Before we proceed to the meat of the webinar, for the first part, we have Ms. Martina Wittmeyer-Pfister to discuss actually the key findings of the study on regulating market-based climate and disaster risk insurance solutions in Asia, realities and options, which is the title actually of our study. And after that, we go more into the experience sharing, the practical side of things. And for this, we're grateful to have two initiatives, the Philippine Catastrophe Insurance Facility, or the PCIF, which will be presented by Mr. Mitch Velosa, the Executive Director of the Philippine Insurance and Reinsurance Association. And then from the Philippines, we moved to Nepal with the Nepal Microinsurance Pool, another risk pooling initiative. And we are grateful to have today Mr. Sudip Podel, who is the Junior Officer of Ajod Insurance, the lead insurance of the MIP. This will be followed by an open forum to be moderated by Dr. Yeager. And finally, at 4:05 to 4:15, we have the Menti, short Menti evaluation and a wrap-up or closing to be given by Mr. Relosa. Okay, so next slide, Shine. Just some simple guidelines to ensure a smooth and efficient webinar for today. We ask you to turn off your microphones and your webcams to conserve bandwidth, okay, and allow for an uninterrupted webinar. For questions, and I hope you do have questions, please post them in the chat feature of this MS Teams. We will pick them up during the Q&A portion. And then the slides actually will be shared to you later, the link via the MEFIN Facebook group and email. Okay, Sunshine will be doing that. Okay, so we have the guidelines. Now we come to the next slide, Shine. Just again, to show you the presenters, we have Martina, our consultant who undertook the study. We have Mr. Mitch Relosa, mentioned earlier, the Executive Director of PIRA, and Mr. Sudip Pudel. I hope I pronounced your name right, sir, from Ajod Insurance. Okay, so these are our presenters for today. Slide Shine. And with that, we move into the first presentation by Martina. And Martina, I turn the floor over to you for your key findings on regulating climate and disaster risk insurance.
Good morning and good afternoon to all, and thank you for the opportunity to present in this dialogue, and also to the supervisors who contributed to this study. The study explores the different options insurance supervisors have in encouraging the insurance industry to provide more and better CDRI products to vulnerable population segments in a protected environment. I started my analysis looking at the existing definitions of CDRI. International agencies such as the United Nations, World Bank, ADB, Access to Insurance Initiative, or the Resilience Global Partnership, they all have defined CDRI in different ways and very similar ways as a risk transfer solution for disaster risks, providing coverages for risks like flood, drought, cyclone. And I observed that over time, the type of disaster included has expanded. Some even consider disasters which are not clearly related to climate change, like earthquakes, pandemics, epidemics, dam failures, and forest fires. CDRI can take the form of a macro, meso, or micro level insurance scheme, depending on who the policyholder is, and as such, it can be a sovereign scheme or a market-based insurance. It is for diverse policyholders, individuals, farmers, small business, or aggregators like microfinance institutions or cooperatives or governments. Some say it is a political tool, while most stakeholders emphasize that CDRI is non-life insurance. Discussing with supervisors in the course of the study, the question came up if a regulatory definition is required for CDRI, a national one. There are arguments pro and contra. A national definition would allow to delineate CDRI from other business, for example, when a tax waiver is adopted, like in Fiji, or like it is considered in the Philippines. Having a definition would allow the regulator to adopt special dispensations. But a challenge could be making the differences clear between the various lines and CDRI. My conclusion from the discussions is that a legal definition could make sense if CDRI needs to be separated for political reasons, not regulatory-wise. However, we can take this question up later. Another question has emerged in my research. Is CDRI only non-life insurance? This seems to be common sense. However, some stakeholders include personal lines as well. For example, Swiss Re considers environmental and property damages and recognizes that with climate change, health risks are increasing for example, due to heat stress or pandemics. The Asian Development Bank also takes this wider view and includes life insurance in the CDRI definition. I think CDRI should also include life risks. From a client perspective, the customers need coverages for assets and life risks, and the inclusive insurance consumers is known to prefer bundled products. Moreover, the industry could use cross-selling opportunities. Next slide, please. For a debate about regulation of CDRI, it is worth to look at the main target segments you see in the graphic. The agriculture segment has smallholders, commercial farmers, agribusiness, herders and fisherfolk, private property owners and households, and the formal and informal micro and small and medium enterprises. Most of these potential customers never had insurance before. As climate-induced damages become more prevalent, more people and small firms are becoming interested in insurance solutions. They experience the impacts of climate change on their livelihood, farms and business. And sometimes they can even tell you that the flood struck 3 times in the past 10 years. Affordability considerations at the demand side and involving powerful aggregators with many members and local presence at the supply side, these are key aspects to develop this market. Some more considerations related to the business environment. These segments need tailored products which are often not existing or not sufficiently adapted, like index insurance for small farmers and their cash crops, or flood insurance for MSMEs in urban areas. Aggregators like cooperatives, microfinance institutions, or farmer groups can help to market CDRI. They can provide their member database, help with risk data, support client education, or even act as agents. I was in Ghana recently and visited a pilot where the insurance company is linked to the Association of Garages, which has 1.2 million members. The idea is to sell a flood insurance product to the members. The head of the association will be the agent, and the association helps with member data and risk and insurance education. Subsidizing premium cost is very common in agriculture insurance, which currently makes up the majority of existing CDRI coverages. A recent GIZ study shows that over 80% of agriculture insurance across the globe is subsidized. Nevertheless, subsidies alone do not create a market, and many other aspects need to be in place, like measures to improve the awareness and know-how of the future consumers about risks and insurance. It is necessary to explain a lot of aspects: products, prices, indexes, subsidies and basis risks, and claims processes, and this in a continued way, for example, by informing in member meetings and making hotlines and apps available. Another important aspect to make this business more feasible is investment costs for the industry. Supporting risk data or co-insurance may help. Next slide, please. In terms of policy issues, insurance supervisors should be adequately involved in disaster risk finance diagnostics and strategy development. This is happening, for example, in Indonesia. However, it is not the case yet in all jurisdictions. Linked to that, the insurance supervisor needs a mandate to support CDRI, which would help to get funding for his engagement. Last year, Fiji abolished the 9% value-added tax for products to the low-income and vulnerable sectors on a parametric insurance product for rainfall, high wind speed, or cyclone events. And in the Philippines, the NIC has been supporting the respective assessment and the policy dialogue regarding this topic, as taxes on non-life insurance are as high as 26%. Of subsidies, setting the right subsidy levels for different farmer segments and income groups, and ensuring a speedy flow of funds from the paying authority to the insurance companies are just some of the issues associated with subsidies. What we saw in the study, some forms of insurance are not permitted or not clearly regulated. The legal frameworks of Vietnam, Philippines, and Pakistan were initially not accommodating some forms of insurance, like index insurance and insurance pools. These three supervisory authorities are now developing specific regulations for index and agriculture insurance. In Indonesia, the form pool and co-insurance are in the insurance and disaster management laws and were allowed, but a fund, as proposed in the disaster risk finance strategy, is not a permissible legal form yet. A bill proposal is underway. Supervisors in Asia and across the globe are developing their capacities, for example, regarding pilots. Many pilots stop after a few years when the development partners pull out. The involvement of the supervisor is crucial in all stages, from pilot development to its evaluation. And supervisors are developing test and learning spaces. For example, a regulatory sandbox for agriculture insurance as implemented in South Africa and underway in the Philippines. Some supervisors have been supporting the provision of climate risk data, as current historical data sets are not sufficient to make correct assumptions about future loss projections, and this is associated with high costs for the industry. For example, the National Disaster Risk Fund Management Fund, a non-profit company under the Securities and Exchange Commission of Pakistan. The fund is mandated to develop a national level NatCat model for 4 different perils. Consumer protection issues include, for example, how to explain index insurance. In this product, coverage and premium are not linearly related, so half the premium does not lead to half the cover. Or in the case of an index insurance contract, how to explain basis risk, namely the challenge that the payment the farmer gets is different to his actual loss. Next slide, please. Supervisors have more opportunity to help develop the market for inclusive CDRI. They can seek the collaboration with other government agencies, for example, from the areas of disaster management, agriculture, or trade, as these agencies can help implement CDRI in various ways. For example, to advance risk and insurance awareness with groups of farmers or MSMEs, or to provide yield and price data. They can amend the legal and regulatory framework, as said before, ensure that index insurance contracts are adequately considered. And in Nepal, the rules for aggregators will be changed. Cooperatives there, like elsewhere, aggregate many farmers and rural people. However, to date, a Nepalese cooperative cannot become an insurance agent. An example for a legal amendment from the Philippines is the Remote Selling Circular of 2020. It intends to protect consumers and provides that insurers shall establish post-selling quality control mechanisms to ensure that the policyholder understood the features, terms and conditions and the benefits of the Another approach supervisors are taking is to engage in technical working groups together with industry associations and insurance companies, for example, to develop co-insurance arrangements like in Uganda, Philippines, and Nepal. Many insurance supervisors agree that they have a market development role in inclusive CDRI, and one approach becoming more common are co-insurance arrangements. Next slide, please. A co-insurance arrangement enables participating insurance companies to underwrite risks that would otherwise be beyond the capacity or the risk appetite of the individual insurance company. Co-insurance describes a contractual arrangement between insurers in one country to write specific types of insurance contracts jointly, each participating insurer taking a pre-agreed portion of the risk. These arrangements can take many forms: a facility like in the Philippines, a consortium like in Uganda, or an insurance risk pool like in Nepal for microinsurance, or in Indonesia for earthquake and fish. Insurance pools are becoming more common in times of climate-induced disasters, as this environment could expose a single insurance company to severe losses. The advantages of co-insurance arrangements are sharing capital, pooling of risk, and cheaper reinsurance, joint development of products and shared administrative and distribution costs, and shared lessons for all participants. Challenges relate to the institutional and legal framework, which needs to be strong and clear with adequate staffing in case a separate institution is set up. Another model is that of a lead insurer. The role of government, which should support the legal framework and, depending on the approach, provide adequate subsidies or put a lead insurer in charge, as in the case of Indonesia with a state-owned insurance company. There can also be challenges when some insurance in the pool are not visible to customers and the product is seen as a lead insurance product. The example of the Uganda Agriculture Insurance Consortium provides some lessons. It started in 2016 with 11 insurance companies, and after 3 years, they managed to reach out to 250,000 farmers. Products are multiple peril crop insurance, a traditional indemnity-based product, a satellite weather-based index insurance product, and an area yield index insurance product. Also indemnity products for cattle, pigs, and poultry, and for larger commercial fish farms. Some of the challenges identified in the consortium after the first 3 years were that pricing should be more accurate, subsidies went disproportionately to large farms, claim settlement within 6 weeks is very difficult, and it became also clear that farmers wanted cover for crops, livestock, and for family health issues. So back to the question, how to make co-insurance arrangements work. I'm now looking forward to the 2 presentations of such arrangements in the Philippines and Nepal, and to our discussion later. Thank you.
Thank you very much, Martina, for setting the tone for this presentation. And now, Shine, could you move to the next slide, please? Okay, so as promised a while ago, we are going to give you 2 initiatives in Asia, and the first one is the one called the PCIF. And for this, we'd like to call on Sir Mitch Relosa to give his presentation. Sir Mitch, nice to see you again.
Thank you very much, Ronnie. Well, thank you again to GIZ and MEFIN for having me and allowing me to share the Philippine CDRI initiative known as the Philippine Catastrophe Insurance Facility, or PCIF. Next slide, please. Now, allow me to give you a bit of context behind the creation of the PCIF. We all know that the Philippines is the most exposed to NatCat events in the world. And here in the Philippines, when we talk about NatCat, it's usually flood and earthquake. So those are the 2 most common NatCat risks that we cover in the Philippines. Now, back in 2018, Lloyd's reports that the Philippines has an underwhelmingly inadequate financial capacity to retain cat risks without borrowed capital in the form of reinsurance. So everybody knows that most of the risks that we write in the Philippines when it comes to cat are then ceded abroad through the foreign reinsurance market. Now, just to give you an idea, the insurance industry's net worth, and this is about a year ago, was about $1.5 billion US. And the expected annual losses from natural disasters would be in the vicinity of $1.1 billion US, leaving a very small margin. Or actually, it's becoming a dollar swapping exercise. Next slide, please. So as a bit of background, we need to recognize that there is an imperative need for a systemic, multi-sectoral approach to address the issue as well as the insurance gap. Just to give you a bit of an idea, it was the people or the corporates that can afford to buy cat peril insurance. And the majority of the populace, the more vulnerable sectors of the population, are not able to buy or afford um, to buy cat peril insurance. One reason of which is, I think Martin did mention it earlier, the tax structure in the Philippines is very high. For property insurance, you pay as much as not 26, but 27.5% in taxes. So, in a country like the Philippines, where there are other priorities, you'd rather take care of food, shelter, and clothing before you think of purchasing insurance. But anyway, the Insurance Commission, the World Bank, PIRA, National Re, global brokers such as A.M. Willis, Guy Carp are all involved in the PCIF. And I'm also very happy to mention that two-thirds of the way, GIZ joined us as well. And the inputs of GIZ were very, very valuable and important. You'll see later in the latter part of my report. Anyway, going back, an MOU was signed by PIRA, the IC, and NATRI to get the ball rolling. Now, what is this MOU? Next slide, please. The aim of the Memorandum of Understanding between NATRI, PIRA, and the Insurance Commission was, number one, to increase the Philippine financial resilience towards natural disasters to be able to hasten the recovery of communities after a large loss event. Number two, address the cat insurance gap. Number three, create a new, more risk-appropriate rating environment that would ensure sustainable disaster premium rates. Now, on item number three, I'd just like to give you a short background. Over the past almost 3 decades or 2 decades, the rates or the cap rates for the Philippines have not been reviewed. So they remain stagnant at 0.15 minimum for earthquake and flood for the past 20 over years. There is a backstory to that, and I won't go into that. So suffice it to say that there was an imperative need to update our risks or our premium rates for CAT. And that was the first order of the day. If not, uh, it would not be sustainable. And what's happening at the moment is that insurance companies uh, have the other more profitable lines of business like motor or the casualty lines subsidize the property or the fire lines of which NatCat is covered under. See, so it's an unsustainable event. We cannot sustain that. So we have to, number one, review the rates, correct it, and then go on forward from there. So that was the first order of the day. The second, or number four, is to increase the cat resilience of the Philippines and its capacity to retain cat risks. As I already mentioned earlier, it's becoming a dollar swapping exercise with foreign reinsurers. And in itself, again, that's unsustainable. And finally, to educate and provide the public with more inclusive access to cat insurance protection. So these were the marching orders. And this is where we started our journey to create the PCIF. Next slide, please. So the objectives of the PCIF are simple. A stronger Philippine non-life insurance industry, higher insurance penetration, adequate and sustainable cat premiums, and increased local catastrophe retention. So again, the objectives are becoming clearer for us. So next slide, please. So the aim and objectives of the PCIF is for non-life insurance or insurers in the country to redirect cat risks to the facility where the pooled risks are shared with the participating companies. By doing so, the facility capacitates the insurers to cover cat risks and manage their exposures to cat risks more effectively. Whereas in the past, we had individual insurers negotiate their own little portfolios with the foreign insurers. Now, when it is pooled, we have a little more leverage. So hopefully that benefits not only the insurers, but the insurance buying public as well. Now, there are obviously challenges that we had to face. And it's good to be able to narrate this so that those that would be going through the same path would not or would be able to answer or address those challenges right away. Number one, next slide, please, is to strike a balance between various interest groups. As you know, well, the insurance industry in the Philippines is not very big, but it's not small either. There are 56 companies, some small, some large. And there was some sort of a brick wall for insurers to be able to submit data relative to their exposures because they felt that this data would be exposing their proprietary information. As you know, we all are competitors in one way, but then we have to be supporting each other as well. So that's where the number one challenge occurred. And then number two, obviously, uh, we said that we want to increase our insurance penetration. But then what was available in the market is only coverage for the corporates or those that can afford insurance. What about those who cannot afford insurance? What about the least serviced part of the population? So there was a question whether this part of the populace was insurable or not. If we were going to look at their houses, they would be built of light materials, built along river coasts or coastlines. So again, the question is, are they insurable in the first place? Right? So we had to find answers around that. Another would be adequate and sustainable catastrophe premiums. I already mentioned that over the past 20 years, our cap rates have not been reviewed, nor have they been adjusted. So, according to models that were used in creating the PCIF premium rates, we saw, or the brokers, the international brokers, passed it through their own modeling, and they said, or they were able to show that the minimum cap rate should be in the vicinity of 0.4, and the current rates in the Philippines was at 0.15. So obviously we had to shift from 0.15 to 0.4. However, we could not do that at one fell swoop because it would disenfranchise a lot of our current clients. We might price ourselves out of the market. So we recognize that we have to do it in stages, and we all agree that we shift to 0.2 first and then adjust as we go along. So again, another challenge is the tight timeline. The Philippine government had a, well, they had, okay, it was one of the conditions to a loan that the Philippine government was eyeing. And because of that, there was a tight timeline in which to launch the PCIF. But the way that we do things in the Philippines, especially in an association such as PIRA, is to do it on a consensus basis. And building consensus is never easy. So we had to explain each part of the way. We had to be totally transparent. So we created a technical working group, and the Insurance Commission mandated that all companies be part of this TWG so that we were all on the same page from day one. So not only do we have a tight timeline, but they also had huge expectations, and we had to manage that as well. And then obviously it was a complicated and time-consuming process. Anything that involves consensus building is always a time-consuming process, especially when you had various um, not various initiatives, but various interests between the parties involved. So where are we now? I'll be very happy to report that as of this morning, um, we have had several sign-ups already. It's open for 2 weeks. So we expect more companies to be joining in as we speak. So after we have the sign-ups, then we would have a better idea of what the exposures would be, and then we go into negotiations with our reinsurers for a common excess of loss. Because obviously we won't be able to retain everything within the Philippine context. So it's a work in progress. We now have a minimum cap rate of 0.2. As I mentioned, that's a transition rate. And because of the questions or the issues that arose, we now, or the PCIF has morphed into two branches or two work streams. One is the pool itself, and the other one is a new product for the underserved portion of the insurance buying public. This is a alternative proposed by one of our member companies, Pioneer, who is also, pardon the pun, but they're also pioneers when it comes to micro insurance. So they are now designing a product with the help of GIZ uh, to create a new product that would also be part of the PCIF initiative. So you have, everybody's familiar with a Philippine Banca, an outrigger canoe, where you have two outriggers, the one on the left and the one on the right. So you have PCIF1, or the pool, as the left outrigger, and then now you have the product that's going to be a hybrid parametric and indemnity-based insurance product on the other side for micro insurance and retail and SMEs. So now you have a balanced uh, activity to come up with a balanced product to answer the concerns of cat risks. So we plan to launch the PCIF1 within December. Uh, that is our mandate. And PCIF2 is a work in progress, but the proponents think that we can also launch it within the year. Now, this is not to say that these are the only initiatives in the Philippines. Um, we all know that GIZ is working closely with two of our member companies, I think it's Crimes and one CISP, on a parametric product that was designed by Celsius Pro. Then there was a review of the tariff regime and updating of the current rates. That's done already. There is an agri-insurance initiative with the ADB, and again, that's a work in progress. Initially, it's a co-insurance arrangement between some of the PIRA members and the PCCI, or the Philippine Crop Insurance. Then tomorrow, we are having a roundtable discussion under the auspices of Earth Security and PIRA, wherein we will be introducing a nature-based solution, or we will be introducing the value of mangrove ecosystems in protecting coastal assets. And finally, we are also working with Arise International and Arise Philippines on other initiatives of spreading the word around on CDRI around the region. So this, in a nutshell, is what PIRA and the PCIF is doing at the moment. Thank you.
Thank you very much, Sir Mitch. That was very comprehensive and insightful. Okay. So from the tropics of the Philippines, we now move to the mountains of Nepal, so to speak, and we'd like to call on our next presenter, also to speak on their initiative. Next slide, Shine. This time is Mr. Sudip Podel from Adjod Insurance. His slide will be on their experience on the microinsurance policy. And at the latter part of his presentation, towards the end, actually, we will be posting some questions to Mr. Podel in order to align it, of course, to our webinar for today. So, Mr. Podel, please, nice you could come.
Thank you. First of all, I want to thank the organizer team for giving me a platform to speak on the topic, and I also want to thank Bima Samiti, the regulatory body of our Nepal in all the insurance company, for providing me to speak on the topic. And Sir has already given the introduction of myself. It's me Sudip Paudel from Adjod Insurance. So next slide, please. Now, first of all, I want to go through all the work we have done in the last 5 years about the micro insurance. The 20 micro finance institutions are connected with the micro insurance in our country. This 20 micro insurance company have given us overall 24,000 plus micro insurance policies, which have declined certainly in 2019 onwards because of the COVID-19 pandemic, which are gradually decreased in the number of policies, but we are increasing from this time because the pandemic have been gone down, and we are also improving gradually. Next slide, please. Now, looking at the micro insurance product, we have around 6 products that we are doing the insurance that are basically critical illness, micro enterprise, cattle and crops, micro personal accident, micro household, and micro health. And overall of these 6 products, only cattle and crops is been subsidized by Nepalese government, and we are trying to do in micro depositor and micro hospicash, but the number has not been that good in this process. In this figure also, we can easily figure out in year 2017-18 we have 5,211 policies, and in 2018-19 the number has almost tripled into 14,261. But after the COVID-19 pandemic, the figure has gradually declined, but overall scenario of last 5 years is around 24,000, which I have already mentioned earlier. And looking at after the insurance policy is issued, there is a system of giving commission for providing us the policy. Looking at the microfinance institution, which get about 25% of total commission in premium commission and management commission, 15 and 10 respectively, and in cooperatives 15% commission is allocated, and in pool company 5% management commission is allocated. Next slide, please. Now, after the policy that has been issued, we have also summarized the claim figures. The claim figures, if we look at the second table, the premium collection is around 1,43,000 USD, and the claim amount paid is around 1,13,000 USD. And after adding the last month data up to June last, 4-5 days data is not included here, and we have paid around 1,17,000 USD in total. Now this is our history till now. Now can we move to the next slide? Now looking at our journey, we have faced several number of challenges which may not be similar to other countries, but looking as Nepal is a developing country and the geographical structure of Nepal is divided into 3 categories. About 68% of the total land is covered by hills and mountains, which makes us very difficult in doing our work. And the premium collection from the ultra poor, the micro insurance always supports the low standard people, and the premium collection is bit difficult for us because in only agriculture insurance, the subsidy 80% subsidy is given by the Nepalese government, and they are also not all awareness is not also being provided to people about the facilities of insurance. Although the literacy rate is increasing day by day, but all the people are not aware about the micro insurance and the facilities they get from us. Now, looking at the efforts and measure how we can address them is that most of the insurance company in Nepal are been in urban areas, which is feasible for all other insurance, but for micro insurance, the offices should be situated in some areas where people can come to our office easily, and the provision of subsidy and grant by the government is not given in all sectors, which may make them difficult to do the micro insurance. And looking at the extension work, there is lack knowledge about the micro insurance, so there must be training seminar or mass awareness program. And I want to add some extra things that the market development challenges. There are different challenges, but we are gradually increasing our rate with having hand-by-hand coordination with Bima Samiti, and which is also the regulatory body of Nepal. Now, talking about the pool, whether there is added value added on it or not, there is no another added value which I have shown it earlier. That's the exact figure, and there are 20 insurance non-life insurance company which do the insurance in our Nepal, and each company has its head and contact person to deal with micro insurance issues. That's all from my side, and if there are any queries or any confusion, that we'll talk in the open session later on. Thank you.
Thank you very much, Mr. Podel. Okay. Shai, would you go to the next slide, please? So you've given us your answers to these three questions in advance. Thank you very much. Okay,
Yes.
So
and I want to add one small thing, that regulatory gaps, we are increasing gradually with having hand by hand with the Bima Samiti. There are no any regulatory gaps till now, but their minor problem are being handled with the collaboration with Bima Samiti. Thank you.
Okay. So, okay, thank you very much again, Mr. Podel, and you will be around for the open forum. So I think you'll be also getting some questions regarding the microinsurance pool of Nepal. Okay. So thank you very much again. And at this point, next slide, Shine. We'd like to move for the open forum. And for this one, I'd like to call on Dr. Yeager to moderate this session.
Thank you very much, Ronnie. I would like to once again encourage everyone to bring up questions, either by raising your hand, I will check on that, or just write them in the chat so we can spell them out. So in case you have any further questions on the topic or comments on the topics mentioned by Martina or by Mitch or by Mr. Podel, please feel free to raise them at any time. Maybe to kick things off a little bit and start the exchange, maybe we can move to the next slide, and I would kind of play the ball a little bit between Mitch and Martina and Mr. Podel, and raise three kind of questions, and I'd like to hear kind of a shot at each one of the questions. There is a little bit of background noise, but okay, let's go. In terms of the definition, Mitch, you heard Martina's comments on the pros and cons of a separate definition for climate and disaster risk insurance. Now, would be interesting to hear from you, from the private sector perspective, what do you think about that? Would you rather be inclined to go for a separate a definition because it may have some advantages? Or do you rather say, oh, please not another definition because we already know our lines of business?
Well, in the Philippines, yeah, we do know what CDRI means, but it would always be good for everybody to be on the same page. And if this is dictated by the regulators, then so be it. At least there's somebody in charge to say CDRI means this. And then there's no room for any doubt, no room for arguments. But I agree. I think we should have a formal definition. And again, not only amongst single countries, but we should adopt it globally.
Interesting. Great. I hope that some people from outside Asia also hear those words now, because that could really be an interesting effort taken by global initiatives such as A2I or Insure Resilience, no, to
Yes.
push forward.
Especially now that there's a lot of initiatives coming from the multilaterals, it would be good if everybody's on the same page. Nobody's confused by what we're doing.
Sounds very meaningful to me. Please, but if there are other voices, let us hear them out. But firstly, let me address as a second question to Martina. Do you think co-insurance arrangements can make a real difference in motivating the industry to provide CRI? Now, you have already given, of course, some indications on that. But now, after hearing the case of Nepal and hearing the case of the Philippines, is there anything that you would like to highlight in particular? Or something that struck you?
Yes, in fact, when I was trying to collect examples, to look at the different models, to speak to experts about co-insurance arrangements, I found that there are an increasing number of international examples in many different countries, and even several models in one country, like, for example, in Indonesia. There is a very old risk pool in Mongolia with a lot of lessons. And there are a few doubts around this model. Well, I personally think it can really, make a difference, but it's still important to explore more on the lessons and the different types of such arrangements. There is very little aggregated literature about these models. And I mentioned the Uganda Insurance Consortium because I had a chance to speak to the director, and there are good studies around because an international donor is supporting them. So once donors are supporting these arrangements, they are interested to document lessons and stay close to it. I think it's necessary to do more research and document ongoing practices and also lessons like Mitch has presented. I found his insights from the table where something like that is structured very revealing and interesting. And as said, I mentioned the Uganda example because there some lessons are documented. With the others, there may be some documentation on recent lessons, but it's not easy to find them.
Thanks so much, Martina. I found also the Uganda case particular history in Uganda of agriculture insurance, for example, and climate-related risk insurance. We saw actually that prior to the pool, it was actually a lead insurer, as we see it in different countries. So we see one insurer steaming ahead and aggregating capacity and knowledge and business, and then the others kind of observing, seeing how it moves. And if it doesn't move so well, they don't follow. Yeah. And it took a long time for me personally, when I was observing it in Uganda, to move to this pooling arrangement, which was then also supported or actually pushed by the government. So government today, Uganda, we also have strong subsidies levels for insurance. But without this intervention of the government, I don't think we would today be where we are today. I mean, I still remember when I was sitting there at MOF, and I saw all those players on the table, and the ministry actually took them by the hand and said, okay, use it together and you work together. Because if as long as this wasn't the case, also the pool arrangement didn't fully work out. Okay, then I have the last question. How do you see the role of insurance regulators in the market development of CDRI? Now, I already gave a little hint, but I would like to address this question to Mr. Pudel from Nepal. You also mentioned Bema Submiti playing a crucial role, but how for you from the industry, how would you summarize the role of insurance regulators?
Hello. Looking at the market development challenges, we are in the initial phase, but we are developing gradually. Now, for this process, we have already mentioned we are having the talk and collaboration with Bima Samiti, but the extension work, research program, and the most important part is the engagement of people and knowing the importance of insurance in their life event is very very important for the livelihood development of the people. As Nepal is a developing country, it's crucial, and we are doing our best to improve this. The data which I have shown earlier of the last 5 years is increasing gradually after the COVID-19 pandemic hit, because in the COVID-19 time our country has been completely shut down, locked down for more up to 1 year. That has hit us indirectly, but we are gradually improving day by day. And the extension work, the training program, seminar, and mass communication is needed for the market development. And the Bima Samiti will also play the crucial role for the engagement of the people. Thank you.
Thank you so much, Mr. Pudel, and I wish you all the best, really. I know that Bema Submiti, especially in agriculture, has been strongly involved together with the Minister of Agriculture. So that's definitely a very important role that they're playing in the market development. Good. Just to complement, I think also to see for Nepal, we have the microinsurance market, but then we are also targeting in the Nepali companies are also targeting upper market structures. So in total, I think, well, at least for the agriculture, the last number that I had was around 125 to 130,000 farmers being covered. So that hints at not only the microinsurance segment being covered, but a large segment above. Good. So having heard those interesting stories, interesting inputs, I would like to see from the audience if there are any further comments or questions. I think in the chat I don't see so far anything, but also no hand raised. I almost can't believe it. Okay, one hand goes up. Mr. Tara, if I'm not mistaken.
Hi, good morning. I was wondering, how do some of these schemes link with any of the macro or sovereign risk pools that the governments might have for climate and disaster risk insurance? I know in the Philippines, at least, there is a risk pool. Sorry, can you hear me better now? So I know in the Philippines there's a risk pool, so I was wondering, I didn't hear any mention of linking back to them or their role in this space.
Thank you, Ms. James. Sorry for mistaking the name. For the question. So the question is, if I get it right, how are those initiatives that are more on the micro level, as we discussed, mentioned earlier, how are they linking to risk pools at sovereign level? And you mentioned the example of the Philippines. That's why, Mitch, from your perspective, how do they interlink, or is there any interlink?
Well, as I mentioned earlier, the PCIF morphed into two work streams. One to cover the traditional market, and the other one to cover the micro and the retail and the SMEs. So together they work like an outrigger canoe. They're not really linked, but they answer or they address almost all the issues.
But Ms. James, if I understand you correctly, you are asking yourself, okay, there is the individual level, the individual insurance customer, and there are countries, nation states that are reinsuring themselves, what we would call macro insurance. And we do see those pools. In the Southeast Asian region, we see CDRIF, which hasn't developed so strongly. In Africa, it's more the African risk capacity that is a bit stronger in its development. But did I get it right? You're asking yourself how those two kind of levels are connecting.
Yeah, that's why I was asking, but maybe I'm not sure if the Philippines is a part of that, of the Pacific pool, so maybe that's the kind of issue. I'm sorry about that.
So not to be mistaken, the Philippines are certainly not part of any Pacific pool. I think that would be part of the Southeast Asian arrangements, which is the World Bank driven CDRIF pool as one initiative, or maybe the strongest initiative. But the CDRIF in this case is not linked to the PCIF.
Not yet, no.
Yeah. So there is actually no connection between the national level and the individual private customer level.
Okay, so I guess then my question is if that's the next level of pooling that should be considered or that we could perhaps look into, because from what I understand, the issue in the Philippines was that, okay, so these individual companies are struggling to get favorable rates for at the reinsurance level, and I think that a lot of these pools were born out of that same concern when you have small islands and smaller countries trying to individually negotiate. So then if we can have that now next level of pooling, perhaps we can even do a little bit better on the pricing, etc. So sorry for my mixing up the geography, but that was the point.
That definitely makes sense. So once the PCIF is up and running, then we can probably interest other pools within the region to take a look at it.
Yeah, okay, perfect. Thank you.
Great, thank you so much for that interesting question, which is really a good question. No, I mean we know that as we mentioned, governments have a key role to play in many of those national insurance schemes. No, but how does this link to the transnational sphere? We know international reinsurance companies distributing the risk. That's one side. That's a private solution. But the other question is, can we pool it amongst countries and regions? Martina, you seem to want to speak up on that.
Not on that one. If we have finished with that topic, I would like to react on some other ideas. Okay.
Please go ahead.
Yeah. Well, back to the definition. Actually, looking at the existing international definitions, they are from the last decade by many international agencies. And I think it's more realistic to have a national definition, maybe not a legal one, maybe a conceptual one. And the National Insurance Commission, in the discussions I had with them during the study, they were quite open and feeling they perhaps need one. So I don't know if anybody is here from the National Insurance Commission. And as I said, I think it's more realistic to have a national definition than bringing all the international agencies to one table and try to motivate them to have one definition or have similar definitions. And they are similar. So, and if I remember correctly, in 2006, Philippines was actually the first or one of the first countries who defined microinsurance. And this definition was adapted several times, but it inspired a global discussion on how to define it, why to define it, what works. And it was necessary to have that delineation in microinsurance. And perhaps it's also necessary, as you say, Mitch, and the NIC thinks to have a national definitions for CDRI for different reasons, which are can be explored further. Thank you.
And I think we from GIZ can thoroughly support this comment, because we also think it makes a lot of sense, or would make sense in the case of Philippines also, in order to count to actually be able to give the animal a size, to be able to steer it. You need to be able to count it better. We find that quite convincing. And nowadays we have great statistics on microinsurance in the Philippines, which are, I mean, show the immense success of the market, no? But only because there is a legal definition and because this is reported, you can actually show the size of the success. Okay, we are slowly coming to an end, but we could still accommodate one more question, I think. I don't want to push it though. There was one more person just showing up via video. Was that an attempt to raise the hand? If that's not the case, then maybe we can move forward to the next slide. So here, I think, Roni, we want to indicate to all the participants, we would be very happy if you just take 1 or 2 minutes and scan this QR code or go to this homepage, and that will be copied in the chat box, and just tell us what you think about the seminar, whether it was helpful or not, whether there were interesting topics or not, or what you would, suggest us to go moving forward, because we still have some Tuesday with MEFIN seminars to go. So Sunshine, I would ask you to please also, here perfectly. There is the link also copied. So please feel free to click and give it a feedback.
Yes, AJ, there are just 3 questions there that they have to answer. So yeah, this will be a quick one.
That's a very quick one. Okay. So we see the first results. There were some people who thought it is very useful knowledge. Some thought it's useful, at least. But yes, the number of people who think it's very useful is increasing. That's very good. Shine, maybe on the second question. Now, this is, of course, a bit more of a challenging question. If you have any thoughts and ideas on that part, let us know either now or later. Maybe move to the third question, Shine. Okay. Just do they have to write here or do they have to click? I'm not quite sure.
They have to write their answers.
Okay, so that takes time. So while people are writing the answers, I may hand over to Mitch again for here, challenges. What are the key learning points, takeaways from CRF webinar? Challenges of setting up an insurance risk pool. Yeah, I think that was the focus of the seminar today, and because also we saw that there is little out there, so we thought it really makes sense to focus on this one. So happy that there were some takeaways on that. But now I would like to actually hand over to Mitch for the kind of closing remarks.
Thank you, Alex. Well, the presentations this afternoon highlight the fact that we are in the midst of a climate change crisis, which in turn exacerbates the effects of natural catastrophes, and call for a need for all stakeholders to put their hands together in a concerted action to mitigate the loss and damage that may occur, and to allow the affected populace to pick up the pieces of the lives and livelihood and carry on. The various examples shown makes all of us aware that there are things we can do aside from sitting on our hands and wringing them in worry. These are worthy examples that can be easily replicated where they may be needed, but we must realize that these examples are almost all in their infancy and are proved theoretically and not necessarily in practice. We do not have the luxury of time, however, to see if it would work. We must put them into place and adjust as we go along. We must share the knowledge and expertise as we do in this exchange, so a greater number of us who have the knowledge and resources can help pitch in, and a greater number of the vulnerable can benefit. So thank you for taking time to share, and thank you for taking time to listen. Whether you're a service provider, a thought leader, a representative of the vulnerable, or a regulator, a whole of society approach will be the only way forward in these uncertain times. Thank you to GIZ and to MEFIN for making this possible, and I trust will allow these ideas to germinate and bear fruit in areas that they may be useful. A pleasant afternoon to all.
Thank
Thank you
you so
very
much. Ronnie,
Ah,
please go ahead.
Okay, yeah. Thank you very much, Sir Mitch, for giving the closing remarks. So this marks the end of our 32nd episode. And for your information, we're already organizing the 33rd and the 34th. So yeah, we hope that you will be also attending those webinars, and we'll be in touch. So thank you to our presenters, Sir Mitch, Martina, to Mr. Podel, and of course to you, AJ, for moderating the last portion. Okay. And yeah, this is not goodbye, just so long, and please stay safe. Okay.
Thank you.
Stay
Bye
safe
bye.
and have a good rest of the day.
Thank you.
Thank you.
Bye.
Thank you.
Thank
Bye.
you, everyone.
Have a great time.